On today's First Time Buyer channel, we are going to answer the question, how much money do I need to be a first-time buyer? Hey, welcome back. Enrique here with First West Financial. I am a mortgage broker in Southern California. I'm actually located here in the beautiful Coachella Valley, and we serve all of California. So we are very excited to bring you the First Time Buyer channel. Now, this is a channel where we talk about all things related to how to purchase your first home. There's a lot of confusion that a lot of people have, and we know it can be a little scary to become a homeowner. So what we do is, through the First Time Buyer channel, we try to educate you, we try to encourage you and teach you how to make good decisions, and also to learn more about the process of becoming a homeowner. So today we are going to talk about down payment. We're going to talk about money. This is a question that I get every single time I talk to a brand new buyer. How much money do I need to purchase a home? And they start asking me questions. Do I need down payment? Do I need closing costs? Who pays for the appraisal? Who pays for the home inspection? So today we are going to talk about all things money, down payment, closing costs. That's what we're going to talk about today. So the first thing you need to do is understand that any information that anybody gives you that is not a lender is probably not going to be very accurate information. So the first suggestion we always make is that you talk to an independent mortgage broker about becoming a homeowner, and to learn what are some of the programs that you can qualify for in terms of down payment, right? So don't go on the internet and start asking questions. Go straight to the source. Talk to an independent mortgage broker. So if you're in Southern California, give us a call. We can answer that question. But let's unpack it for you today. So the first thing you need to do is understand that there is not one answer that's going to fit everybody. There are some people that are going to qualify to purchase a home with basically no down payment. There are certain programs that allow you to purchase a home with no money down and no closing costs. So we're going to talk about those in a minute. But we're going to talk about the most common way to purchase a home. So I imagine that as a first-time buyer, you may or may not have a lot of funds to put down payment on your home. So if that is the case, we're always going to look at two options right off the bat. The first one is going to be a conventional loan with 3% down, where you have to be a first-time buyer, and the other one is going to be an FHA transaction with 3.5% down. So those are the two most common ways to purchase a home with low down payment. So let's talk about those. First, FHA, 3.5% down. Very popular option. The advantage of FHA is that the down payment is fairly small. So if you're buying a $200,000 home, it's $7,000. That's going to be the down payment portion. We're going to talk about closing costs in a minute. Now, if you decide to go FHA, you're going to have the advantage that the funds can actually be gifted, and there's some rules about that. That's for a different video. The second thing is that you don't have to have perfect credit. We do FHA loans with people who have a 640, a 650, even lower than that, and they still get a very, very good rate. And then, of course, the qualification is not as difficult as other loans. Now, if you are a first-time buyer, you haven't owned a home in 3 years, and you have really good scores and not a lot of debt, then we sometimes recommend a different program. It's called Fannie Mae. Fannie Mae and Freddie Mac offer 3% down payment options to purchase the home. Now, the disadvantage is that if you have blemishes on your credit, you have collections, you have a recent bankruptcy or foreclosure, that's not going to work for you. You have to have good scores to qualify for some of those. But we can always move you to FHA. And in terms of rates, they're both very, very, very similar. So as you can already tell, if you're buying a $300,000 home, with a Fannie Mae 3% down, you only need $9,000 to get into the house. If you're going FHA, you're going to need a little bit more, but it's still very reasonable. Remember, the bank is lending you the bulk of the money. You're putting just a very, very small portion of it. So that makes for a great opportunity. Now, there are some programs available that require no money down. Now, because of COVID, and remember, I'm filming this in December of 2020, because of COVID, a lot of those programs became more restrictive. But there are still options available where you can purchase a home through the California Housing CalHAFA program and some other ones that allow you to buy the home with no money down. Some of them are grants, some of them are second loans that you don't have to repay right away. So there's a lot of options. So we're not going to get into specifically talking about down payment assistance today, but just know that there are options available for that. So we've already determined, one, that you don't have to have perfect credit, two, that you don't have to have a lot of money, that you can get into a house with 3 or 3.5% down. Now, there are some areas in the United States that allow for 0% down through the USDA. That's the United States Department of Agriculture. There are just very specific areas. And there is no rhyme or reason which those areas are. So talk to your mortgage broker and find out if the area where you want to purchase a home is eligible for USDA. Here in the Coachella Valley, there are some areas that allow USDA, but most of them don't. So it's not an option that we have with every house. There are other areas where the entire county is eligible for USDA. I have a friend of mine who does loans in Florida, in the Lakeland area, and boy, that whole area is USDA, so she specializes in that. Every other buyer that comes in goes into USDA because the whole county is USDA, so it works really well. So there are some eligibility requirements for that, so call us and we can tell you more about USDA. Now, if you're a veteran, you also have the option to purchase a home, in most cases, with no money down. So the VA loan is very, very, very good for that. So we can talk about that again in a different video. In fact, I've already recorded a couple of videos about the Veterans Administration loan. So the VA is there. So as you can see, lots of options. Now, people say, well, what else do I need? How much more money do I need? Well, in addition to your down payment, every single loan requires closing costs. Every single loan. But the advantage is that there are some options for closing costs. Number one, you can have the seller help you with some of them. Now, when you are in a very competitive market, like right now, and you have to go and get closing costs, the seller may not give you that choice. They may not give you that option, right? So be aware of the fact that it's not a given. We always tell people, if you can save a little more money to take care of your closing costs, it's going to make your offer more competitive. Now, in our case, we offer some rebate programs with some loans, not all of them, where we can give you $2,000 or $3,000 or $4,000 to qualify for closing costs. So how much money is closing costs? Well, a lot of it depends on the program, and a lot of it depends on what you're buying and your taxes. But on average, just to give you an idea, if you are purchasing a home for $300,000, your closing costs are going to be around $8,000. So that's what happens. So how do we put these deals together? So let's say you purchase a home with 3% down. The house is $300,000. So you're going to have $9,000 down payment. Then we can try to give you $1,000 or $2,000 rebate from the lender for your closing costs. So if your closing costs are 9, instead of having to come in with 18, 2 of them come from the lender. And then you can ask the seller to contribute maybe $4,000 or $5,000. So that covers 7 now. And that way you only have to come in with $2,000 out of pocket for closing costs. Your mortgage broker can help you figure this thing out. We put these deals together all the time. I get realtors that call me and say, hey, we want to make an offer. We don't have a lot of money for the closing costs. We only have $2,000 or $3,000 because the borrower has only their down payment. And we put it together. We have the seller contribute some, then we have the lender contribute some. In some cases, even the real estate agents sometimes kick in $1,000 or $2,000 to help the deal happen. So there's a lot of opportunities when it comes to closing costs. A few things that you never want to do. You never want to get an advance on a credit card or get a loan for your down payment. I have people that say, oh, you know, I'm just going to go take $10,000 loan out of my credit card or an advance on my credit line. That's going to make the down payment ineligible in most cases because you cannot borrow the money for a down payment. So be very, very careful when you do those things. Talk to your mortgage broker about it. What other things out of pocket are you going to need? Well, you're going to have to pay for an appraisal. That's usually the buyer has to pay for that. It's $500 on average. And then you're going to have to pay for a home inspection, around $400 that you also have to pay out of pocket. So as you can see, buying a home is not cheap, but at the same time, if you think about it, you're buying a $300,000 home and you can get into that house for $11,000 or $12,000 out of pocket. That's not a bad idea. Remember, the money can come from your checking, your savings. It can come from a gift, from an authorized source, usually a relative, your employer. I've had employers who have given their staff, some kind of a bonus to purchase a home. In addition to that, it can come from a program, a grant program that we talked about. And those are the ways to do it. Now, there's one more area that you have, and that could be that you can take money from your retirement. You can take money from your 401k or from your IRA to be able to do a down payment without getting penalized in most cases. As you can see, it can get complicated, but we're here to hold your hand and we're here to walk you through the process. Don't let the lack of funds, don't let the lack of down payment keep you from becoming a homeowner. Talk to an independent mortgage broker like us, and we can walk you through that process. We specialize in working with buyers that are buyers for the first time. Maybe you bought a house 7-10 years ago and you're confused. How do I get back on the horse? We can help you. So you can give us a call at 760-488-6482. Comment below. Even if you're not in California, give us a call. We can always recommend a broker that has been vetted, that we know it's an independent broker that's going to do a great job for you if you're in a different state. We're always here to help you get started. I hope you have a great day. This has been Enrique with First West Financial for the First Time Buyer channel. Have a great day.